You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it's time once again for the Option Block. Yep, we're back. Hope you're hungry. Hope you're excited. We've been off for a little bit, of course, for the holidays here in the U.S. Hope you had a good time with your family if you're here in the U.S. If not, hope you had a good time with your family anyway. It's not just locked to us here in the domestic U.S. Maybe you got some deals shopping in as well. Who knows? In fact, we're in the midst of it yet again right now. It's not just Black Friday anymore. Oh, no. Of course, we've got the old Cyber Monday going on as we speak. Maybe you're listening to us as you shop for deals on your site of choice. Enjoy. Good luck wherever you are doing your deal hunting these days. Of course, you can get us live every Monday and Thursday, noon Central, 1 p.m. Eastern, via the Mixler and after the fact on your device of choice. Make sure you send in those questions, those comments. We do indeed love to hear from you guys. And joining me on the program today, let's start off. Let's go. He hasn't been on in a little bit. Let's welcome on the last emperor, Mr. Konstantin Vrandopulo, holding down the active trader hot seat over there in Fidelity Land. Mr. Last Emperor, welcome back. How was your holiday, sir?
Holiday was amazing. Spent time with family, actually, up in New England, just right outside of Boston. I was able to get out in the nick of time yesterday on the last plane down here to Jax before they started all the delays due to weather. So got lucky. Here I am with you today, joining from the office. So happy to be here. Hope everyone had a great time. I certainly did, so I hope you did as well.
So you were not quite Rock Lobster adjacent, but pretty darn close. If you wanted to drive another 6 to 8 hours, you could have gone to visit him.
Pretty darn close. I'm sure Mr. Rock Lobster is being snowed in as we speak right now.
That's true. Mr. Rock Lobster, let's get to him before before the gods of winter intervene here. Mr. Rock Lobster, how was your holiday, sir? And are you digging out as you speak?
We only got like an inch of snow. I can't even call it a snowstorm. Now that I have lived in New England for 14 years, I'm going to rate this on a 1 to 10 scale of snowstorms. It's a 1.
That's like a 0.5. An inch, that's like a Tuesday morning in Maine. That's nothing.
I mean, it's nothing.
You don't even really have to dust that off. It kind of just blows away on its own.
Yeah, when you can get snow off the porch and off the front steps and everything with a push broom, you know you're not in anything big. So we're okay. It is a little chilly, so that keeps all those thieving clammers away. But other than that, things are okay.
The weather keeping the clam pirates at bay. Mr. Rock Lobster lives to fight and indeed to clam another day. And last but not least, joining us from the quiet, tranquil hinterlands known as St. Charles, where it never snows an inch because they have that weather shield up, unless they turn it off, unless they want it to snow. That's how in control they are out there. Where we are joined by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here, and yeah, I'd say out in Maine, the 1 inch of snow, that's like July snow out there, but nonetheless, happy to hear that the clam piracy is doing pretty well, and that you don't have to worry about those bad guys for a while.
Uncle Mike joining us from the mobile office today. Uncle Mike, you know we have too many Australians hitting the network these days. When I go to dial you, our network defaults to the Australia country code. So I was like, why are we getting Uncle Mike? Oh, because I'm dialing Australia to bring him in. So just to clarify, you are not in Australia today, sir.
I am not in Australia. I'm not in St. Charles, but to honor the WWE, let's say I'm in parts unknown today.
Ooh, I like it. Let's see if we can figure out what some of those parts are up to with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you heard the man. Welcome to the Trading Block, the portion of the show where we break down what the heck is traded, what is rocking and rolling out here on this first Monday back from our truncated holiday week. And it's a bit of a red one on the screen. Most of the markets having a bit of a sad face out there today. Pretty much the only thing up today looks like is oil. And, of course, the vol. We'll get to that in a little bit. The Dow is actually the laggard again. But when you're a laggard to the downside, are you really the laggard or are you indeed the winner? Dow off only about 0.75%. S&P right about 0.88 or so percent. Actually, just ticked down to 0.85%. And the NASDAQ leading the charge, as it is wont to do, in the wrong direction to the downside this time, off over 1%, almost 1.1% out there. Gold also taking a bit of a break today, which is kind of interesting. And WTI ticking up about 0.75 point or so, still north of that 55 handle, threatening 56 out there as we're all playing that OPEC watch game. A lot of watch games going on out there. I mentioned earlier at the top of the show, kind of jokingly, but we are in the teeth of that. It is that holiday sales season. The Black Friday kicks it off. Of course, if you don't live here in the U.S., listeners, it's called that because that's when the retailers start kicking into the black for the year with all their big sales. And it looks like Black Friday did pretty well. Sales hit an all-time high of about almost $7.5 billion, up 43%. That's a huge amount. I'll have to dig in to see exactly what that baseline is from. That seems large from last year. It might be from some other frame of reference. I'll have to dig in, but still a big bump. Of course, that's not enough to lift us today because most of the markets kind of feeling that trade war woe yet again. Kind of a combo. We got Trump, of course, maybe picking some fights with South America there, Brazil and Argentina, threatening on imposing some new tariffs on them, accusing them of currency manipulation. So the prospect of a renewed Latin American trade war, perhaps spooking folks. Of course, the China deal also perhaps in a bit of hot water here with, of course, the signing of the Hong Kong bill here in the U.S. China, go figure, not a fan of that one. Most sources saying the trade deal, if it's going to happen, it's not going to happen anytime soon. It won't happen at the earliest to be right at the very end of the year, which would be interesting timing. But that sounds like that's even perhaps wishful thinking at this point. So a lot of trade war woes, perhaps renewed exacerbation of trade war woes, and a bunch of other things weighing on the broad markets today. Our old friend VIX Getting a little bit of a lift out here today, as you might expect. It was at about 14 3/4 coming into the show. That puts it up over 2 handles, nearly 3 handles, 2 3/4 handles from where it was last show. So a little bit of a lift. That's why I wasn't exactly feeling a huge sell-off out there in vol land on my daring, difficult 2-week prognostication for vol views. Of course, we still got a full week to go, so we'll see how that plays out. But guessing vol for 1 week is challenging. Doing it for 2 weeks, nigh impossible. We shall see how that plays out. Our old friend Vivix, of course, a.k.a. the volatility of volatility, also getting a bit of a lift, up about 6 handles from where it was this time last show, a little bit north of 97. It was about 91 on our last show. And our old friend VXX also reversing the erosion train, at least for the time being, up about 3/4 of a handle, puts it at about 17.35 or so coming into showtime. Let's go back the way we came. Let's start in the land of Australia, a.k.a. St. Charles. Mr. Uncle Mike, sir, not exactly an Uncle Mike day out there. What is lighting up your tape, sir?
Well, I think that with what you have going on, the fact that we're still not even down 1% and the trade deal's not going to happen and we're not even down 1%, I think that's actually, I hate to sound like this obnoxious bull. Well, actually, I really don't mind because I probably sound like that all the time on this show for the last 800 episodes or so. But if this is bad news, this is all the market has on bad news, that makes me think that we could be in for some more good news. The benefit of days like today, when you're in a bull market, is that if you do have some short calls on or some short call spreads to kind of mitigate some risk with where you're going, you might be able to trim some of the position a little bit or take some of that off. Or if you didn't feel like you got into the rally soon enough, days like today give you that opportunity if indeed you are a bull on this marketplace. So I think that with where we're at on this is ultimately, it's just a basic down day. The fact that we have the bad news on the trade deal and President Trump doing what he does. I mean, he reminds me a lot of Al Davis, the late owner of the Oakland and LA Raiders. It seemed like he was always just fighting somebody in terms of, he was mad at the city of Los Angeles, so he moved back to Oakland. He was mad at the city of Oakland, so he moved to LA. And it seemed like he was always suing the NFL and things like that. And so it seems like there's always something going on to where someone else is the bad guy. And so that could be good or bad. I mean, the Raiders did have a phenomenal run of it when Al Davis was the owner, but in time, he also had a bad run of it too. But nothing, not trying to be political, just a random observation that I had on a lot of things that are going on. Silver has not had much movement today. It did drop down a little bit last week, but has not had a lot of movement today. Financials really have not had a lot of movement on this either. Like you had said earlier, Mark, technology or the NASDAQ is leading the charge to the downside on today's marketplace. And so it's going to be interesting to see if this ultimately holds to be a buying opportunity. Right now, the market's looking for things to come up and down from. I think that if we were in the midst of earnings season and this announcement had happened, we were having good earnings like we did, or good earnings news to the market as we did, this might not even be a down day. But we have to understand, though, that we've had quite the rally recently, and markets tend to want to pull back at some point, and maybe the pullback is this less than 1% down day today. Who knows? But as with anything, make sure that you are protected. Make sure that you have a plan in case the market does go wrong or go against you. As I always say, long-term bullish, short-term cautious. Make sure you are cautious.
That's why I like Uncle Mike. He could turn anything into a silver lining. A sell-off day, nearly 1% sell-off day. It's a good opportunity to take off your covered calls. I like that optimistic outlook, sir. You're the ray of sunshine here on the old program. Now let's turn from you to a much darker cloud, going out to the hinterlands where the Rock Lobster, nary an optimistic bone in his body, sir. Mr. Rock Lobster, what is catching your eye on this this is actually more of a Rock Lobster day in the market, a very down day, a very pessimistic day. What is catching your eye, sir?
I don't know how I got the pessimist moniker, how that was thrown at me, but I'll take it. I'll wear it. Even what Mike's saying, I felt like there was like the news gauntlet was a little bit thrown about, we're not going to lower any we're not going to sign any phase one stuff till we pull back these December tariffs. And I think that date's the 15th. So I think what could happen now that the rhetorical glove has been tossed, that December, like all the options around like the 15th, whatever, those could set up for quite, I think, some kind of interesting trading. Another day of bad news, another day of good news can move things around a bit. But the reality, the vol futures are barely up. I mean, they're up for sure, but not that much. There was already substantial premium in them. And so, like usual, the market just, okay, we're waiting for something to happen, and then it does. So you have this move where VIX cash is up. I think it's a fair move, given what's going on with SPX. And we'll just see if we can kind of break below that 3,100, which is 18 handles away. I would view, because it is a mental, anytime you cross one of those big even numbers, it's kind of a hurdle. And I think that, that could get you to VIX above 16, but it wouldn't surprise me if we go back the other way tomorrow. Like this is all just a funky surprise, and and everything is fine. So I would only view this as the first salvo, and as of right now, the market is not selling off near as hard as it has in the past on this. So maybe we're on the other side. We're kind of on the top. We've already crested the mountain, and we're looking down now on all this sort of trade talk. But we'll see. But as of right now, I mean, VIX looks fairish. The curve flattened up a little bit. Everything kind of right-sized itself, so to speak. And we are not making new highs in volatility today from where we were this morning. So without new highs in vol, I don't get excited because that means all the buyers have stopped. All the vol buyers, they all took their, at least for today, they've taken their goodies and gone home. So I think that's where we sit. And unless something changes, it would not surprise me to see all the vol futures back to where they were tomorrow if we get no response on this.
All right, let's see if we can get a response here from the last emperor as well to see what the Fidelity legions, the Fidelity masses are trading. I'm going to go out on a limb, Mr. Last Emperor, and just hazard a guess. Even on a quiet unch day, they're usually trading up some ROKU. I got a feeling they're going to be slinging some ROKU today. Of course, Morgan Stanley coming out and seems like cutting the knees off of ROKU here, saying maybe it's a bit overdone here, and the market responding, crushing it off 12.5% right now, right around 20 handles or so. So it's trading right around the 140 level out here today. So yeah, not exactly a good. They got down. Looks like it got down to about 133. So it has rebounded 7 handles from the dire bit early this morning, but they really took the legs off from this thing earlier today. So ROKU, the set-top boxes, who knew this was such a volatile segment? Yet apparently it is. Mr. Last Emperor, I'm going to go out on a limb and guess that the Fidelity legions, they're slinging some ROKU today, sir. Is that the case?
It's definitely a fact. Number one on the list, definitely the most active, 59% buys, 41% sell. Stock. I mean, it's been topping the list. If it's not number one, it's usually in the top 4 by Fidelity customers. I mean, I could see why if you're swing trading, whether you're trading options, you're trading stock directly. It has a lot of volatility, a lot of movement. So it'll be an interesting name to trade. Obviously, today off a significant amount, like you mentioned, kind of bounced off the lows. So I guess it depends on where your entries were. You probably were able to squeeze out a few points out of this name on the long side if you were able to nimble in the morning. But I gotta say, I was looking at implied volatility levels here in ROKU going into today. Was at 57% IV30, and you would think that that's a tremendous amount. I usually like to use the rule of 16, so I'm kind of looking for that one standard deviation expected daily move. If you do the math, right, it's about 3.6% daily. Well, the stock, when I looked at it a little bit earlier, was down 15. So, if you are a math geek, you probably agree that 3.5 standard deviations usually kind of quantifies for as close to 100% probability for a daily move as possible, but moved way more than that. So we'll see where we end up. But I can tell you that obviously option markets were not expecting this sort of move. Morgan Stanley, being mentioned in that Barron's article I read over the weekend, exactly like you said. So stock is moving around, volatility popped, almost 10 absolute percentage points. So, and it's doing a ton of volume in the options markets as well. Looks like 305,000 contracts as of right now, ADV of 203 over the past 90 days. So it's definitely trading. So that one is number one. Your hunch was correct. Second name, you already mentioned as well, Amazon. We've talked about Amazon quite a bit on the show. Obviously a very liquid name, plenty of options trading in there. Amazon, relative to its competitors, kind of has been stuck in a range for quite some time, ever since it reported earnings last time, down almost 1.5%. And like you said, Mark, it's Cyber Monday, right? So if anything, you would expect Amazon to be reflecting some positivity today, especially after those crazy numbers that we heard, from the Black Friday holiday. But nonetheless, it's down, and I did a relative comparison earlier today versus Walmart and Target, which seems to be their top online current competitors, and obviously it's been underperforming over the past 3 months. Target being, kind of the leader in that group there. But Fidelity customers are positive, leaning 64% buys, 36% sells. Relatively active option markets in there as well. Third name on the list, first time I've ever heard of this stock. I'm sure that it probably was in the news while I was out last week. I wasn't paying as close attention as I normally would. But Clovis Oncology Incorporated, CLVS, up 11.5% today. And it looks like the stock is just ripping higher. It's up 370% inside a month on news of its ovarian cancer drug sales being, I guess, higher than expected by a lot of the analysts, not only here in the U.S., but international analysts as well. So some news coming out of Europe, their permits and things of that nature. Stock went from $3.50 to $17 in a couple of weeks. Never heard of this name, but Fidelity clients are definitely trading it actively, leaning 57% buys, 43% sells in there. So that's one name, I guess, that's up on a pretty lousy tape. And then number 4 is Apple. Apple's been trading sideways, consolidating, being the number one market cap company in the world, down around 88 basis points right now. Has been kind of trading between the 260 and 265 range for the better part of the past 2 weeks, really. So that kind of rounds out the list. I mean, a lot of names that we frequently see on here. CLVS is definitely the first time I've seen it on the list, but it's up here. So there's some food for thought.
So you don't wake up in the morning and have your coffee and then immediately check CLVS? It's not part of your morning rotation?
I don't know. I guess I would have been better off if it was. 370% rise day after day. It looks like it would have been a good opportunity if you got into it on the long side earlier on. I'm not so sure of how far it could possibly go. I looked at a longer term chart, and it's been a lot higher in the past. So I guess we'll have to wait and see. But that is going to go on my relative watch list. That is of names unknown from prior days.
Watch out, Clovis. You're on the Emperor's radar now. He's watching you. Keep an eye. Let's see what the rest of you fine folks out there are trading outside of, or indeed including, the Fidelity masses coming into this portion of the show here. We see actually a surprisingly active day. I mean, I guess this it's been the first decent sell-off in a little bit, so even though it's not quite 1%, as we said at the top of the show, but still enough maybe to spook some volume back in there, and we're seeing that reflected across the broad indices out here. VIX doing some decent paper today with about 451,000 contracts on the tape. ADV back shy of 400K again, 392,000. SPY at closing in on 2.5 million. The ADV is 2.5 million. So doing both of those, already have done or closing in on a whole day's worth of volumes. SPX at about 1.1 million. ADV, guess what? 1.1 million. The Qs at about 403,000. Qs where the lightness is starting to show here. ADV is a little bit north of 500K. And the Russell, at least the IWM flavor, is at about 244,000, and their ADV is about 287. So a little bit light on those two, but everything else at or exceeding already its ADV, which is kind of interesting. Let's look at the top 10 most active equity options, see what we can find in there. Looks like your usual stable of top teners in here. I don't see any Clovises. That must be an interesting pocket of liquidity that's going up over there on Fidelity. We're not seeing them on the broad top 10. Number 10 cost you 110,000 contracts to break into the top 10 today. If you did so, you would be Tesla. Number 9 is Disney with 127,000. Number 8, AMD. Usually a top 3 are AMD. Today, a paltry top 8. 128,000 contracts. Number 7, Amazon. Like the last Emperor mentioned, maybe Black Friday, Cyber Monday, not exactly blowing the doors off. The sales seem like they're good, so Amazon not exactly feeling the love. But the volume-wise, it is 131,000 for number 7. Number 6, Facebook. $147 on the tape. Number 5, Microsoft, 148,000 contracts. Number 4, good old BABA. You can see a little bit of a theme here, 153,000. Number 2, Bank of America, 154,000. Number 2, that's number 3 is Bank of America. Number 2 is Roku with a whopping 304,000 contracts. But you know what? 12+% sell-off, downgrade, not enough to topple our number 1 perennial stalwart here, Apple. 352,000 contracts for the number 1 spot. Let's look really quickly. The most biased paper seems to be Bank of America with about 70% coming on the call side of the ledger. And now let's get to it, a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. I gave my voice pretty much a good week of rest, and yet start talking again, and it starts acting up on me. So I'm going to do the rest of the show with a cough drop. Hope you don't mind. Prevent any flare-ups. I have a lot of talking yet to do today. And this Odd Block, we had a little bit of an audible here, a little bit of a late edition. It was Uncle Mike inspired because he at the top of the show was talking about parts unknown. We know he's a big old-school WWE guy. Well, guess what is lighting it up out there today in terms of volume? In fact, our friends over there at ORATS who do a lot of the earnings, volatility, earnings straddles, all that good stuff. They also do a lot of unusual activity scans and volume scans, which is something we incorporate into our Eye of Sauron. There are many different moving parts make up the Eye of Sauron. And one of the things they highlighted today, which was kind of interesting, is indeed our old friend WWE. One of their metrics is the options volume versus 20-day average. That's kind of how they trigger things. And WWE right now has the highest options volume to its 20-day average. Is at 3.5 times coming into the showtime. They're saying about 10,600 options trading versus the normal ADV of around 3,000. Calls to puts 10,000 to 426. So that puts it at about a 24 call to put out here. Stock right around 60, almost 61. It's actually down a little bit today, down nearly 2%. So outpacing the market to the downside. But so what is lighting it up? That was enough to trigger me. I had to go check it out. Uncle Mike, you inspired me. Is it parts unknown? Let's see. Let's find out. Let's see if we can find out what's going on. It looks like actually the big trade out here that is lighting up the tape, Mr. Rock Lobster, is, looks like, I'm going to guess a bit of a roll. It's the D60 calls going up 1,200 times for 265. So right pretty much off the bid, about nickel off the bid. This is all done as a spread against 2,400 of the 865.80 vertical. Looks like that one was done for not quite $4, $3.90 or so. And it seems like, yeah, paper probably buying that one. So Mr. Rock Lobster, that has a bit of a flavor of someone maybe taking. This is kind of what Uncle Mike was saying. He was saying take your covered calls off, but this guy looks like he's taken perhaps his D60s off and deciding to roll instead to a vertical. So he's getting 265 for those. He's rolling around into about looks like 390 for that spread. So taking the 80s on the table there to reduce his outlay a little bit. Looks like if you're looking at total, there's about 3,000 of the D60s have gone up today against 4,000 of that vertical. So interesting ratio. Mr. Uncle Mike, are you pleased to have inspired some WWE-related odd blockery today, sir?
Oh, yeah, I am.
There we go. How did I know you'd be excited by that? But yeah, this came across our radar. We couldn't fail to discuss it. Right? That's kind of a double negative there. We couldn't avoid, how about that, discussing what's going on out there. Cough drop making me loopy. Mr. Rock Lobster, sir, do you concur with this? Actually, before we do that, I got so excited to bring in Uncle Mike, I didn't do my standard, let's see where the hell this stock has been over the course of the past year. Because if you've been following this name, it's been a bit of a turbulent one. Last year was one of the biggest gainers in the market. It was a huge driver, a lot of it on their licensing deals and then the much maligned Saudi Arabian deal as well. They are, I think it's fair to say, well off those highs now. Of the course of the year, their high was, let's see, about $99, so threatening 100. Right now they're at 61 3/4, so well shy of that 1 year high out there. And it looks like they took a big hit maybe back in earnings too, because the 29th they sold off pretty badly. Then down to November, they were trading 68 on the 29th of October. And then by November 1st, actually, they were trading 55. So they took a big hit there as well. So rough waters of late, Mr. Rock Lobster. Do you concur with this? Looks like someone perhaps keeping their upside party alive and spending a little bit to do it and doing a bit of a ratio as well. Are you feeling that as well, Mr. Rock Lobster? And also, what is your favorite WWE memory, sir?
To be honest, I don't have a WWE memory.
I can see you as like a Hogan kid back in the day. Was that you?
I remember Hulk Hogan. You know what? Wasn't he in a Rocky movie?
Yes, exactly. That's what he's known for.
Okay, so I'm going to say, honestly, that might be my last time that I saw it. I don't know. Never hit me, I guess.
Uncle Mike is slamming his phone down in disgust as we speak, sir. You have offended him deeply.
I guess in the whole...
I can't handle this on the show, Mark. You got to cut his mic or something. This just can't be had on our show.
This is heresy, sir.
Apparently, and then I heard it again when my kid went to preschool, and then another kid's dad was having him watch the WWE. And that was my last... That was like 14 years ago.
You're like, that's it. We're homeschooling. No more of this WWE talk.
Exactly. My question is, so the person makes money on his D60s, and then he rolls up to the H65s. He buys twice as many for twice as much. I would say that's a pretty bullish chunk of paper, wouldn't you?
Yeah, it seems that way. The stock has taken a bit of a beating of late, so maybe not as much on those D60s as he could have a little while ago. I'll have to go dig in and haven't had a chance. This was kind of a last-minute audible because Uncle Mike loves his WWE, and they are doing so much paper today. But I didn't have a chance to see when those D60s were opened. That might provide a little bit more insight for us. But yeah, interesting stuff. And you're right, it does sound like maybe he's feeling the love here to the upside. The stock has been beaten up of late, so you maybe can't argue with them there. Of course, there was a lot of insiders dumping. Vince, it seemed like he was dumping recently as well, so there has been some selling. I think they were selling around the 73 level, so a wee bit higher than where it is right now, but also well off the highs out there as well. So fascinating stuff out here in the land of all things body slams and SmackDown. The stock not taking a bit of body slams. It's kind of unch today, so it's interesting timing here for all things WWE. We're going to file that one. We're going to come back to that because Uncle Mike gets giddy when we come back to WWE. So we're going to file that in the to be watched category. So Mr. Rock Lobster is going to have to deal with it again down the road. Sounds like around April timeframe. We'll be coming back to that one. Meanwhile, let's keep on rolling toward our actual Eye of Sauron. triggered for us today. Looks like we have a bit of a theme for the rest of the odd block, Mr. Rock Lobsters. People drawing some lines in the sand. Let's kick it off here with everyone's favorite, Tanger Factory Outlet Centers. And this is, in case you're wondering, it's not a factory outlet, it's a REIT. It's a REIT, but they invest in shopping centers that contain outlet stores. So there you go. All sorts of backwards on that one. Ticker symbol SKT. This one trading $15.65, actually bucking the trend today, up about half a buck or so, or nearly 3%. So a good day here for SKT. Inappropriate ticker that they may have. A year ago, they were trading well north of where they are right now. They're trading around $25, pretty close to it. That was right around their 52-week high as well, because pretty much the rest of this chart has been a long, slow slog to the dark side. They hit $13 and change, $13.82 back in late August. Then they rebounded a bit up to $17 in early September, then sold off again to about $14.30 or so in October, then rallied again to about 17.5 in late October, and then they've kind of been drifting back down again to where they are right now, right around the 15 handle. So their 52-week low, actually $13.61, so they're a little bit above that now, but also well off their highs, about $10 to the north here. So let's see what our Eye of Sauron found, and it does indeed look like it is the Rock Lobster's favorite trade, the old line-in-the-sand puts. A decent chunk of them, 13,828 to be precise, of the D's 15 puts, going up for 21 cents. These are a penny off the bid here. Going up here for 21 cents. This was clearly, obviously, opening. Most things you talk about here are going to be opening here on the Odd Block listeners, or if they're not, like their last trade, they're going to be rolling. And they are earnings, but not in this cycle. Earnings come on the 12th of February. Mr. Rock Lobster is like someone perhaps drawing I wouldn't say aggressive, but a fairly decent. This is right around a little bit shy of at-the-money puts here, and certainly the stock has drifted well lower than the 15 handle over the course of the last year. So there is a fair chance this guy's going to get put some stock, and a fair amount of it, for his 21 cents. What do you think about our friend? You agree, sir, that he's drawing a somewhat aggressive line in the sand here in Tanger Factory Outlet Centers?
You know, is it like the death of the strip mall store or something on this trade? I'm just looking at this, and I feel like somebody's trying to grab the bottom here again. It's like a yield play. You see this a lot. I mean, I do this kind of stuff myself all the time, just selling puts and stuff, and looking at a possible dividend if it's, as a out of favor stock. So this definitely looks like that, that kind of trade. Usually a big chunk of stock, that's 1.3 million shares worth. So, not a small chunk of change. For sure, but it does feel like somebody's trying to do a little bit of that line in the sand trade, and it could be like distressed, like these outlet centers and this big retail in the age of Amazon. So I would say it feels like there's a little more risk in this one, but they seem to pay their dividend, which is pretty hefty. So at least through October, it's been a pretty, what I would call, they reduced the dividend a half a cent. So I think maybe that's part of it. They're just, maybe there's a little bit of worry there in that line in the sand, but somebody's going for it for sure, I think.
Outside of WWE, which was, like I said, kind of an audible, it does seem like there was a bit of a theme to our odd block. Our other two names we're going to profile, we're going to do one now, but I'll squeeze both of them in just for fun. Let me know if you find a pattern to these, Mr. Rock Lobster. Next up, in addition to the fact that their names are somewhat difficult to pronounce, you got Macerich, a Macerich company. Looks like they are also a real estate investment trust that invests in shopping centers. Go figure. And it appears someone also blasting out pretty sizable puts, a penny off the bid, this time 12,316 times for the D's 25 puts, going up for 16 cents. Macerich also has earnings. They're also in February. So just file that in your member category for a second, in the old memory banks there. On our final name here, we're going to lump them both together because it does seem like they are related, is Taubman Centers, Inc. Go out there on a limb, take a guess, Mr. Rock Lobster, what this name is and what it is that they do, sir.
Well, let me guess. Taubman Centers. I think this is one of the richest guys in the country, and he owns shopping centers.
Yep, it's a REIT that invests in shopping centers. So this is an oddly thematic. We don't usually have them this line up this neatly, listeners. So clearly a large fund or someone out here is perhaps deciding to draw aggressive lines in the sand in all these shopping center REITs, maybe playing on what Mr. Rocklobster was saying earlier, maybe playing on the fact that this narrative of the death of the mall perhaps is a bit overdone, at least in the near term, because clearly they want a little bit of a bounce, or maybe they want to buy themselves some stock, because you also saw 6,413 of the D30 puts going up for 22 cents. This time, 2 cents off the bid. He got himself a whopping 2 cents here. Also earnings this name also in mid-February. So Mr. Rock Lobster, we have effectively 3 fairly sizable, looks like line-in-the-sand put trades, all in REITs that invest and own shopping centers with outlets in them, so highly specific. All of them are a penny or two off the bid. All of them expiring in December. Mr. Rock Lobster, what do you think? You think we got a bit of a trend here on our hands?
I think we do. Okay, so I'm just going to say this particular REIT operator, just for some perspective, I look back at the dividend history of Taubman Centers, okay? In the mid-'90s, right, they're paying 25 cents a share for a divvy. Even in March of 2009, they were still paying 41.5 cents. They did not raise their dividend in 2 years. They had a quick cut in 2010, and then they went back to raising their dividend again for the next 9 years. So very interesting. It pays 10%. You know, I don't think there's a lot of and 10% is a pretty huge dividend. Again, this stock was $64. Now it's $32. So is it the death of retail, or a real interesting thing that I would not have looked at unless I saw the show, but I'm going to now look at it more, because clearly they're either expecting all these retail, these shopping mall owners to have a big dividend cut, which is certainly possible. But somebody's stepping in and, you know, looking to take some delivery at the 30 level. It's hard not to argue with them. You know, it's a bottom fishing expedition, but holy gosh, they really are with the rest of the market at all-time highs. I don't know if this is the canary, if this is a harbinger of something that's going to change, but like ridiculously low levels for all of these stocks. Crazy. Like retail's making money and all these stocks are in the basement. So really, I can only say it's a real interesting look on all this stuff. But it's got to be the same person just going out there and just whacking all these puts out.
One would seem, and it does seem like you're right. If that narrative is correct, then it does seem like they probably want to take delivery, because hard to get those juicy divs if you're just writing the puts. But interesting, they are writing fairly aggressive puts. We have Stadini in the chat who's mentioning that all these names were mentioned in Barron's this weekend, so it could be a little bit of a correlation there as well. Some fund manager reading a little Barron's this weekend and deciding to blast out some line-in-the-sand puts. Tell you what, these all are apparently correlated, so we're going to mark all of these in our to-be-watched category. We'll be coming back to all these juicy REITs. Not too long. These are all decent options. We'll see how these work out. Meanwhile, we got to keep on rolling. It is Monday. It is time for a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, it's Monday, listeners. That means it's time to dispense some options, wit, and or wisdom. We often like to check in on this segment, see what the Fidelity masses are asking about when they're calling up the active trader strategy desk. Mr. Last Emperor, it sounds like you're getting some calls that are maybe in line with what Uncle Mike was saying at the top of the show, which is this is an interesting time to perhaps adjust some of those covered calls, because it sounds like you're getting a lot of calls to the strategy desk about that exact topic. Is that?
That is exactly correct. I know that Uncle Mike does quite a few of these strategies for his clients, so I'm sure he'll have something to add here. But I wanted to bring this up because this has been a topic of conversation that has been coming up quite a bit. So let's break it down for the listeners today. I'm sure that most of you who have been following the show are very astute when it comes to option strategies by now, but it never hurts to kind of break down the basics and maybe talk a little bit about adjustments that we might need to do, or the opportunities in terms of times when the markets do give them to us, what to do, right, with a particular strategy that you have on. So first things first, covered call writing. I often think about it, it's just a short call position against the stock that is already owned, but it doesn't really talk about, it doesn't speak to the timing of the stock purchase in and of itself. And I think that is a big issue for most people. We have to kind of set some boundaries and understand whether we're just doing a buy right as a strategy, which means that you're buying the stock at that particular moment and you're selling a call against it for a strategy, or you're doing an actual override where you've owned the stock before and you're selling calls against that position. It might be a stock that is actually a part of the core position in your portfolio, so you might have a very different outlook if that is the case. Understanding the max profit and max loss scenario from the start, I think, to me, is absolutely key. So let's go through that. Obviously, for a max profit, for a buy right strategy, you would be looking at the short call strike that you're choosing, less the stock price that you're paying. So you're subtracting that out, and you're adding the premium back in that you've received for selling that call. An example would be stocks trading at $50. You're selling a 55, let's say going out around 45 days or so, for $1.25. Well, what's your maximum profit? $6.25, right? 55 less 50, that's 5 points, and then $1.25 that you receive for that short call. Max loss is the stock price that you're actually paying less the short call premium received from the get-go there from the short call. Of course, that also equates to the break-even point, which is gonna be important for us from the long-term strategy standpoint of view. So the break-even point, we need to understand where the risk actually starts to kick in. I like to think of a buy right strategy in a very similar sense as I think about a regular bracket order kind of in my head, right? What am I doing when I'm buying a stock? Well, I'm buying it because I have an outlook on it. If I'm buying it long, I have to be bullish that stock with a particular profit target in mind on the top side. What do I also do at the same time? Well, I'm looking for a stop loss level or relative level where I will be looking to get out if in case, right, I was wrong in my assumption and the stock starts going against me. So if you think about the buy right in a similar fashion, you could think about that short call selling strategy as a relative point where you would be taking a profit on the stock by creating a sell limit order. You also are bringing in a little bit of premium up front, and that creates that small cushion underneath the stock price that you're actually paying for the position to begin with. So thinking about it as a bracket order from the start helps out because essentially what is the point of the strategy? Well, over the long haul, I would say that covered calls are helping us reduce our cost basis in a long stock or ETF position. And that means that each time that we're bringing in a little bit of premium, it actually softens our cost basis that were originally paid for the stock when we got into it. Selling premium helps us weather the storm when markets get a little volatile and stocks start potentially to move south. And we need to understand that strategy is not a hedge. It doesn't fully protect us from the downside. But the more times you do it, and the more times you get to keep the premium If the stock is oscillating around a particular level or goes higher, you lowering that cost basis each and every time helps you soften the blow from the stock actually moving lower in more volatile market conditions. So, the factor of it not being a hedge, the factor of us having, neutral to bullish outlook on the underlying is, something that we have to understand from the get-go before we actually enter the trade. The interesting part, guys, is that most of the calls that I actually get is not the problem of, okay, I put on a covered call trade or I did an override and the stock moved against me, the stock actually moved lower, what do I do? That doesn't tend to be, the majority of calls, which is interesting to me because that's where you're actually usually thinking of how to strategically position. What do I do? And when I asked them a question, well, what would you do if the stock went down? Well, I would cover the call probably at hardly any cost at all. I would buy it back, and I would probably, roll it down by a strike maybe and roll it out in time, right? So if there's no time premium left in that short call, I would be basically bringing it in to bring in some more time premium in between, and I'll hold the stock long term, keep doing that, right? So continue to decrease my cost basis. All right, well, if that's so easy to understand for most people, how come it's so difficult for us to understand what we need to do when things actually go our way? So the majority of calls that I get are, well, I sold a covered call or I did an override, and the stock ripped through the short strike. What do I do? Right? I have this feeling as if, I'm looking at the call and, it's showing me red numbers and I feel like I'm losing. Well, number one, first things first, right? If you've done a covered call and the stock went through your strike price, you basically squeezed out the maximum potential profit out of that trade, right? So that's a good thing. It's not necessarily a bad thing. What we want to be thinking about when the stock actually does move higher through the short strike to the upside is our outlook on the underlying from there on out. Important thing to remember is when you're selling calls against the stock position, your asset that you're trying to benefit from is time premium or time decay. So always look at the remaining time value in the option contract. If there is none of it left, or maybe 5 or 10 cents of it left, and you have a significant amount of time remaining for that option to live through, it might not make sense to keep that position on because all you're doing is effectively locking up that capital until the expiration date where the stock is going to be called away. So you might be thinking of how you can strategically adjust that position if it did go in your favor and did so very quickly. By rolling out and actually creating a position where additional time value, right, might be paying you, between now and then. So, that is a common question that I get. I think, again, not thinking about, well, I did the wrong thing and I have given up upside for hardly any benefit potential is the way to think about it. If we understand from the very beginning that it's a bullish to neutral strategy and you recognize that you should be comfortable and happy by selling the stock at the level where you're selling a call, you should be all right. Common adjustments on the upside, like I mentioned, just be thinking about that time premium that's left over. If there is none, especially leading into maybe an ex-dividend date on the stock, you definitely want to make an adjustment, either covering that call and letting the stock roll higher or rolling it up and out. So that kind of sums it up for me. And I think staying true to the strategy is very important. Remember why you put it on originally.
Mr. Uncle Black, really quickly before we roll into our final segment, anything you want to add? I know covered calls are a favorite topic of yours, sir.
Couple things. The first thing is that, number one, excellent analysis of that. I couldn't have really said that much better myself. The only thing I would add to it would be in the early days of brokers, I'm convinced that the covered call was invented so that way the broker is always right. the stock's the same, you tell your client, oh, it's great because the time decay is working in your favor. Stock goes down. Oh, thank God we got that covered call on. We're getting at least some money out of this one. But don't worry, the stock will recover at some point. But we were smart for selling that covered call. And if the stock goes higher, well, we're not getting the full profit on it. But you know what? We're making money. That's the important thing. You always have something good to say to the client. And so that's why I think a lot of brokers did used to push this to clients a lot. The second thing I would add to it, if you don't want to see red numbers on your screen, do the synthetic. Sell a put. And if the market goes your way, then you'll just see green numbers, and you don't have to worry about red numbers. That is, of course, unless the stock goes down. The trade's the same, but that's another way with which to look at it. And from my years of experience, it seems that when people sell puts and the stock goes their way, exact same thing, but it seems to have a lesser bite when the stock goes higher and the lost opportunity mentality. That is all. Excellent strategy block.
All right, that music means, listeners, we are up against it. So we're going to do a combo around the block and what we have cooking segments, just get it all comboed together. Since we're just talking to Uncle Mike, let's stay with him. Mr. Uncle Mike, sir, what are you watching for the rest of this week? And also, if folks want to learn more, maybe they want to call you up to discuss covered calls in length and in detail. Where should they go? What should they do, sir?
Well, I'm watching the tweets from the White House, seeing if we have anything going on there, wanting to see if there's any updates on that. Also watching the all-time highs in the S&P. We're really not that far off from them, so seeing if we can make another run. We actually were at all-time highs in the futures probably about 12 hours ago, so we're really not that far off from it. Seeing if and when we recover and where we're going to go from there. If you'd like to learn more information about what I do and how I can help people as a financial advisor who actually understands covered calls and short puts, go to my website, stcharleswealth.com, and would love to talk with anyone in terms of being their financial advisor.
There you go. stcharleswealth.com is the place to go. Mr. Rock Lobster, same question for you. What are you watching for the rest of this week? And if folks are intrigued, maybe they want to reach out to you for your curmudgeonly slices of wisdom, where should they go? What should they do, sir?
Well, the King Curmudgeon, you want, go to optionpit.com. We have a Cyber Monday sale. I think everything in the store is 50% off. We're not really discounting our subscriptions. But the cyber, anyway, those things are off. I think I jumped the gun. What I'm really watching, do we get past this last Chinese tweet thing? And, in a lesser degree, like now we threw tariffs on countries with devaluing currencies. Again, it's like that's just enough to make the market, let's just call it, this is phase one of volatility. We need at least two more things to happen before we get to zone 3 or higher. So for right now, I'm just looking at that because ultimately it's been about the tweets and what comes out of the White House lately.
There you go. Optionpit.com is the place to go. You reach out to the curmudgeon himself, ask him about the Zone of the Monk, sign up for his newsletter, all that good stuff. And last but not least, Mr. Last Emperor, what are you watching for the rest of this week? And if folks are intrigued, they want to reach out to you and the Fidelity team, where should they go? What should they do?
Yeah, fidelity.com/options to apply for options trading on the account. Of course, if you do already have an account, feel free to give us a call your regular service number and request an appointment. Ask for myself, Trey, or Colin by name. It'll be a pleasure to talk to you one-on-one. What I'm watching, of course, for the rest of the week, a few earnings on the nose here. I think Salesforce is going first. Tomorrow we have ULTA, we have LULU, so a little bit of consumer numbers probably coming out on consumer spending there from ULTA's and LULU's side. So we'll see how things go. I also want to say that all of the news so far that have been coming out about harsh talk or ratcheting down of that harsh talk has been initiated on the Chinese side, and it seems like Washington D.C. is not really responding to it in any way because the market hasn't been rocking down significantly on those news. So I would like to see and what I'm looking for really is if they're actually going to start confirming some of this rhetoric or actually commenting on it in any way. I think if they did start to do that, the markets will probably react, a little bit more than they are doing right now, whether it's to the downside or the upside. So that's something that I'm watching, I'm sure that we'll speak again and we'll reconvene soon. We'll get more information tomorrow than we have today. That's the beauty of the markets.
There you go. If you want to kick the tires for yourself, maybe reach out to Konstantin and the rest of the team over there. You got to begin your journey, Fidelity.com/options. Kick the tires, light the fires, and you can have those lengthy conversations with Konstantin and everyone else about covered calls and all that fun stuff. But you got to go to Fidelity.com/options to begin that journey. And if you don't want this journey to end, you're saying I need more content in my ears, well, don't worry, we got you covered. We'll be back in about exactly an hour, a little bit less actually, to talk all the hot things going on in the world, the crypto, derivatives, a lot of stuff popping off there, the vol, the options, unusual activity, the term structure, all that good stuff. We'll have a guest joining us from Verge Currency. It's the hot new currency. If you've been listening to that world out there, you know they've been making some crazy, somewhat salacious headlines. They'll be joining us to talk about all that good stuff. We'll be back in about exactly an hour, so join us then. Listen on your device of choice. Just hit next. Should be sitting there waiting for you. Otherwise, we'll see you back here for a lot of fun stuff in between now and Thursday. Then, of course, Thursday for TWIFO and indeed for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.